Welcome to Momentum Monday. Today is March 16, 2025. We're looking at a chart of the S&P 500. Um, I mean, the index and most stocks are still in a correction mode. In the past few weeks, the S&P is down about 8% from its all-time highs. The QQQ is down about 11%. And yet, many of the momentum leaders from the past 2 years have experienced much deeper pullbacks, which is normal. They're much more volatile than the indices. So when the index dropped 10%, it's kind of normal to see a momentum stock pull back 30, 40%. The difference is that if we're in a strong bull market trend, when the indices pull back, typically the market leaders, the momentum leaders, they don't really pull back. They just, they go sideways or they just build new bases. And in this case, in the past few weeks, we've seen many of those past momentum leaders experience significant drawdowns. I mean, let's take a look at NVIDIA, currently down 20% from its all-time high. And at some point last week, it was down 30%. And they're definitely, the leader, the AI leader in the past couple of years. But this is nothing compared to stocks like Tesla, which is down 50%. Stocks like PLTR down 31% from its 52-week highs. Robinhood down 41%. And then some of the other leaders, Reddit down 45%. And this is after the big bounce it had last week. It was down a lot more than that earlier last week. App, which was up basically 50 times between early 2023 and their highs earlier this year, is down 44% already after the bounce they had later in the week. Some of the other leaders, VST, which is energy play, down almost 40%, VRT down 44%. I mean, I can just keep going, and most of those momentum leaders from last year, from 2023, are down between 30 and 50% in just a few weeks. So the damage has been substantial in the past months. And we saw a little bounce. This is I guess, the silver lining, that in the second half of last week we saw a bounce, which curiously happens right ahead of FOMC meeting next week. And I think the market is probably anticipating that the Fed is either going to cut rates, surprisingly, next Wednesday, this coming Wednesday, or at least they're going to acknowledge that inflation has been coming down, unemployment is starting to pick up a little bit, and they will, keep the door open for multiple rate cuts later in the year. I think the market is going to want to hear at least one of those things. Otherwise, it could get spooked, and we can see a continuation of the current correction. I think the most likely scenario is that, the Fed is going to mention something about rate cuts, and we will see some form of a bounce, at least short-term bounce. But, no one really knows what the Fed is going to say. What we know is that the current White House has a, very undefined strategy towards tariffs, which in the market doesn't like uncertainty. So this is why we're seeing that volatility in the past few weeks, and many people coming up and saying, if the current tariff policy remains on the same path, we might see a recession later in the year in the US. And just a quick fact, in 2022, the interest rates on the US national debt was about 500 billion. This year is expected to be 1.2 trillion. So the government will probably, try really hard to cut rates. Um, you know, if it's even possible, and if the market allows that, because those interest rates payment are becoming substantial. Um, so in the meantime, if we're talking about momentum and price leadership, the couple spaces that stand out are gold, which broke out again last week, made new multi-year highs, basically new all-time highs. And gold miners are also finally starting to catch up, and they're trying to break out from that, multi-year base here. So definitely one of the strong spaces um, in the market, and you can see how the relative strength line basically spiked significantly higher in the past month as the general market went into correction. The other space that has been really strong is China, and you can see here FXI, which can represent a few Chinese large cap stocks. It's already trading above the highs of its last year September October rally, which is significant, because most of those stocks they rallied like 50 to 100% in September October of last year, and then they almost fully retraced that gain, and now they're back to new highs. And here's KWEB, which is the internet Chinese ETF. Here's BABA, definitely one of the Chinese leaders. As you can see, they fully retraced that move here from 80 to 120, went down all the way back to 80, and now they're even higher. They're 140, and quite a few other Chinese stocks are kind of acting constructively. Here's Baidu, um, on the weaker side, but Apple said that they're partnering with Baidu regarding AI in China, so I wouldn't be surprised if we see a gap and go after earnings. They're kind of setting up here near 100. And the Chinese electric vehicle stocks, have been really strong so far this year. I think the strongest one, XPEV, big move here, 12 to 26. Really extended right now, so we probably see a pullback towards 20-day, and I really um, don't know much about that company, and I don't know how much we can trust any of that accounting data that they share, but we have to admit that there's been a rotation into Chinese stocks in the past 3 months, basically. And I think that's all for this week. I think it's really important what the Fed is going to say this Wednesday regarding their interest rates policy. And the market is secretly expecting a rate cut, or at least a guidance for future rate cuts, because this is one of the few things that could potentially prevent a recession. And yeah, so that's all. See you next week.